is time for the big picture. Let's welcome in the team from Charles Schwab. We've got Joe Mazzola, Director of Trading Education for Charles Schwab, and Kathy Jones, Chief Fixed Income Strategist of Charles Schwab. All right, thank you both so much for this afternoon's panel. Joe, let's start with you. Let's talk about some takeaways from this week.
I mean, the whole week was really based on Nvidia earnings, and then they met, they beat, they crushed, and the market held. So I think from an equity standpoint, there was a little bit of fear kind of going into that, and we saw a little bit of hedging heading into the event, a little bit of put buying, and then boy, after they came and knocked the cover off the ball, all of that fear dissipated very quickly. We're starting to see a lot of kind of upside call buying again as investors are ready to just continue riding this train up. We've been talking about concentration risk for a while. I don't think that's abated much. We've seen a little bit of kind of spreading out this week. I think the earnings cycle has shown that it doesn't have to just be IT and communication services that can lead. We've also seen expansion in profits in healthcare, financials, industrial. So I think that's helping to widen the base a little bit. But we as we're approaching kind of all-time highs and continuing to push towards new all-time highs, there's not a ton of breadth below the surface, but I think enough to sustain it, at least in the short term.
All right, let's flip to the fixed income side. Kathy, we had some Fed rate talk this week. Let's talk about the impact to the bond market for this week. As we wrap up this week, we're seeing the yield on the 10-year dip a little bit today. But what's been the impact that you've been watching?
Well, as your previous guest indicated, the market backed up. It's now absorbed the idea that the Fed is on hold for a little bit longer than the market had been pricing in. So now when you look at 2-year yields, they're discounting generally 3 rate cuts this year, which is about accurate, I think, or certainly consistent with what we've heard from the Fed. Long-term yields have drifted a little bit lower today as the curve reflects that expectation that the longer the Fed's on hold, the slower growth, less inflation down the road. So we're just kind of in a holding pattern now, waiting for all of the economic data that comes out over the next 2 weeks.
Yeah, you're right. It does look to be a holding pattern when you look across asset classes today. And Joe, you talk about Nvidia and just kind of the impact on the overall market. And it's still, one of our guests earlier talked about how it's difficult to bet against Nvidia. It's like betting against Patrick Mahomes. Let's talk about just the impact to the overall market and just the market scope. Today, in general, you're still seeing Nvidia hold on to gains, but across the board, we've got choppy action. Do we expect to see Nvidia still be the leader?
Well, I mean, let's just kind of look at what's happened so far. I mean, coming into earnings, Nvidia was about 4% of the S&P 500, around 5% of the Nasdaq in terms of market cap, and it was responsible for about 35% of the year-to-date gains in the S&P 500. Now that was prior to earnings, right? That was prior to the stock moving $120. So, it continues to be a behemoth. It continues to kind of pull the markets with it. You saw a lot of that with some of the complementary ancillary stocks within the sector kind of moving up yesterday. But there's a little bit of divergence today too. We're not all the chips are participating today. And like I said, I think one of the things that I don't think it needs to become a concern, but it just needs to be on investors' radar a little bit is that there still is this concentration. And when I was looking at sectors and specifically that were trading above their 50-day moving averages, there's only about 4 of the 11 GICS sectors that are there with 70% of the components trading above that 50-day moving average. So, you got a market that's pushing at all-time highs, but not everybody's participating. It can stay that way, and it can stay that way for a while, but just be aware that there's a little bit of crumbling below the surface.
All right, and Kathy, what are you paying attention to next week? Are you expecting any kind of a flight to safety, or what would be the catalyst for that?
Well, I doubt there'll be a flight to safety, but we do have the PCE numbers coming out, which we know, of course, are important. And after the CPI came in hotter than expected, I think there's going to be some concern about PCE following suit. So I think we're looking at probably a pretty choppy market, pretty cautious market, and a lot of traders probably squaring up positions ahead of those numbers coming out. Most of the big numbers will come out at the end of the week. Of course, we have Fed speak all week, and we have some auctions next week. So it's going to be busy and choppy, but I think the focus will be on that PCE number.
Oh, yeah, PCE certainly in focus for next week. Kathy Jones, Chief Fixed Income Strategist, Charles Schwab, and Joe Mazzola, Director, Trading Education, Charles Schwab. Thank you both.